full Israeli-Iran missile conflict, U.S. involvement, and global economic risks. In 2025, the Middle East teeters on the edge of chaos. Iran's missile attacks on Israel and Israel's looming retaliation have sparked fears of a wider war, one that could drag in the United States and even ignite World War III. How did we get here, and what does this mean for the global economy? Today, we'll unpack the conflict, America's role, and the risks to markets worldwide. The 2025 missile crisis. Let's start with the spark. On October 1, 2024, Iran launched over 200 ballistic missiles at Israel, its largest ever direct attack, in retaliation for Israeli strikes on Iranian proxies like Hezbollah. Israel's Iron Dome intercepted most, but the message was clear. Iran is willing to escalate. Now, in June 2025, Israeli media reports suggest a major retaliatory strike is imminent, possibly targeting Iran's oil or nuclear facilities. Estimates warn Iran could fire thousands of missiles in response, paralyzing Israel's economy for days. The United States, Israel's closest ally, is deeply involved, but treading carefully. President Trump, re-elected in 2024, has distanced himself from strikes on Iran's nuclear sites, prioritizing diplomacy to avoid a broader conflict. Yet, the U.S. is bolstering Israel's defenses with air systems and deploying troops to the region, signaling readiness. Reports indicate the U.S. has evacuated personnel from high-risk zones, like Iraq and Bahrain, hinting at fears of Iranian retaliation. A senior U.S. official called this crisis more serious than any in the past, raising alarms about global conflict escalation. Why does this matter to the global economy? The Middle East is a linchpin of energy markets. Iran produces 3.2 million barrels of oil daily, and the Strait of Hormuz carries 20% of global oil and Qatar's natural gas exports. Iran's threats to block this choke point could send oil prices soaring past $100 a barrel, as seen during past Middle East conflicts. Brent crude has already jumped 13% to $85 since October 2024, and a sustained disruption could push prices to $130, knocking 0.4% off global GDP growth. The economic ripple effects are immediate. Investors are fleeing to safe haven assets like gold, up 30% this year, and U.S. Treasuries, strengthening the dollar. This pressures emerging markets like India, which relies on Middle Eastern oil, facing higher import costs and a 9% drop in exports. Global stock markets are wavering, with the CBO volatility index up slightly, signaling caution. A prolonged conflict could trigger inflation, forcing central banks to keep interest rates high, slowing growth in Europe and Asia. The specter of World War III looms large. Iran's nuclear program is a flashpoint. Experts warn Iran could produce a crude nuclear weapon in months, with 250 kilograms of 60% enriched uranium by February 2025. Israel views a nuclear Iran as an existential threat and may strike without U.S. support, risking a fracture in U.S. and Israel ties. Exposed claims 68% of Israelis favor a strike, but only 37% without U.S. backing. A direct Israel-Iran war could draw in regional powers like Saudi Arabia or proxies like Hezbollah, escalating into a global conflict. A wider war could disrupt more than oil. The Red Sea, already plagued by Houthi attacks, handles key trade routes. A blockade of the Strait of Hormuz would spike shipping and insurance costs, impacting global supply chains. China, which imports 1.5 million barrels of Iranian oil daily, could face economic strain, raising prices for its exports to the US and Europe. This could fuel inflation, potentially tipping the global economy into recession. The US is pushing diplomacy to prevent catastrophe. Trump's administration is in talks with Iran to halt uranium enrichment, but Israel fears a soft deal. Gulf states like Qatar are mediating, assuring Iran of neutrality to keep trade flowing. OPEC's 5 to 6 million barrels of spare capacity could cushion oil disruptions, but only if production and transport remain intact. Failure could lead to severe economic stress, especially for oil-dependent emerging economies. Could this spark World War III? The Atlantic Council's 2025 survey found 40% of experts predict a multi-front great power war by 2035. A miscalculation. Israel striking Iran's nuclear sites, Iran blockading Hormuz, or proxies escalating, could pull in the US, China, or Russia. Ex-posts warn of a World War III summer, with polymarket odds of an Israeli strike by July at 44%. A US-Iran war could knock 0.3% of global GDP directly, with oil shocks and uncertainty amplifying the damage. For consumers, the impact is already tangible. Rising oil prices mean higher gas and grocery costs. A sustained conflict could push inflation higher, delaying central bank rate cuts and increasing borrowing costs for households and businesses. Emerging markets face currency volatility, while developed economies grapple with trade disruptions. The US, with domestic oil production, is less exposed, but political pressure from gas prices could influence the 2025 midterm elections. The path to peace is narrow, but possible. US and Gulf diplomacy could de-escalate tensions. An overseas supply buffer might stabilize markets. But the risks are immense: oil shocks, inflation, and a potential global conflict loom. The world watches as Israel, Iran, and the US navigate this high-stakes crisis. Stay informed, because the stakes couldn't be higher as we are aiming for the future of global stability.